Imagine waking up to find Bitcoin skyrocketing overnight. And this time, it's not just traders making money. It's institutional investors, hedge funds, and even everyday people profiting big. The secret? Bitcoin ETFs. But what exactly is a Bitcoin ETF? And is it the golden ticket to crypto wealth or just another Wall Street trap? Stick around because in the next few minutes, we're breaking it all down. How they work, their risks, and whether now is the perfect time to invest. And here's the wild part. Bitcoin ETFs could be the key to mainstream adoption, pushing prices higher than ever before. But there's one hidden risk that most investors aren't talking about, and it could change everything. We'll reveal that later, so keep watching. What is a Bitcoin ETF? A Bitcoin ETF, or exchange-traded fund, is a game changer. It allows investors to buy Bitcoin without actually owning Bitcoin. Instead of dealing with private keys, crypto wallets, or exchanges that have been hacked before, you can simply invest through your stock trading app, just like buying shares of Apple or Tesla. But why does this matter? Because it opens the door for trillions of dollars sitting in retirement funds, pensions, and institutional portfolios to flow into Bitcoin without regulatory headaches. And that could send Bitcoin's price soaring. Why Bitcoin ETFs are a big deal? For years, crypto enthusiasts dreamed of a world where Bitcoin was as easy to buy as stocks. The problem? Until now, crypto investing was risky and complicated. Scams, lost passwords, and regulatory uncertainty scared away many investors. Bitcoin ETFs solve this. Instead of buying Bitcoin directly and storing it in a wallet, investors buy ETF shares that track Bitcoin's price. This means no need to worry about hackers or lost keys. No stress about exchange crashes like FTX. Easier access for big money investors. And here's the kicker. When institutions invest, they don't just buy a few $100s of Bitcoin, they buy millions. What happens to Bitcoin's price now? When gold ETFs launched in 2004, gold's price skyrocketed over 300% in the following years. If Bitcoin follows the same pattern, we could see a massive price surge. Some analysts even predict Bitcoin could hit $200,000 in the coming years if institutional demand keeps rising. But here's the reality check. Bitcoin ETFs don't actually buy Bitcoin directly. Instead, some track Bitcoin futures contracts, which means prices can sometimes disconnect from actual Bitcoin trading. This is where things get interesting. The hidden risk no one is talking about. Here's the part that could shake things up. While Bitcoin ETFs make it easier to invest, they also put power in the hands of Wall Street. The same institutions that once called Bitcoin a scam are now controlling large portions of its market through ETFs. Could they manipulate the price? And what happens if regulations change? It's a debate among experts. Some believe Bitcoin ETFs will fuel adoption, while others warn that too much Wall Street involvement could go against Bitcoin's decentralized vision. So, should you invest? If you believe in Bitcoin's long-term growth but don't want to deal with private keys and crypto exchanges, a Bitcoin ETF could be a solid option. But if you're a crypto purist who values decentralization, you might prefer holding actual Bitcoin. The big question now, will Bitcoin ETFs lead to a new all-time high? Or is this just another hype cycle? That's what we'll explore in the next video, where we break down expert price predictions and what's next for Bitcoin in 2025. So, if you want to be ahead of the game, make sure to stick around for part 2. Drop a comment below. Do you think Bitcoin ETFs are a game changer or a trap? And if you found this valuable, hit that like button so more people can understand what's really happening in the crypto world. So, now that we know how Bitcoin ETFs work and why they're a big deal, the big question remains: what happens next? Will Bitcoin ETFs trigger a new bull run like we saw with gold ETFs? Or is there something lurking beneath the surface that could send prices tumbling? Because while some experts are predicting Bitcoin could reach $200,000 or more, others warn that the market is walking a tightrope. In this section, we're diving deep into the numbers, the risks, and what's really happening behind the scenes. And trust me, you'll want to stick around, because at the end, we'll uncover one shocking prediction that could flip everything we know about Bitcoin on its head. Bitcoin ETF impact. What's happening right now? Since the approval of Bitcoin ETFs, we've already seen massive shifts in the market. Institutional investors who once dismissed Bitcoin are now quietly piling in. Big names like BlackRock, Fidelity, and Vanguard have launched ETFs, making Bitcoin more accessible than ever. And the results? Billions of dollars flooded in within the first few months. Trading volumes surged, pushing Bitcoin's price toward new highs. Volatility dropped, a sign that institutions are stabilizing the market. But not everything is as bullish as it seems. The catch: who really owns the Bitcoin? Here's the part no one is talking about. While Bitcoin ETFs make it easier to invest, they also give control to Wall Street. Unlike buying Bitcoin directly, where you own your private keys, investing through an ETF means you're trusting a financial institution to hold Bitcoin on your behalf. And this raises a major concern. Can Wall Street manipulate Bitcoin? We've seen this before. When gold ETFs launched in 2004, prices surged, at first. But then, big banks started using derivatives and paper contracts to manipulate the market. Could the same thing happen with Bitcoin? Some analysts think so. Institutions could short Bitcoin to suppress prices. ETF providers might rehypothecate Bitcoin, essentially lending it out multiple times, creating paper Bitcoin that isn't actually backed one-to-one. Governments could step in with new regulations, tightening their grip on the crypto market. And if that happens, the entire narrative around Bitcoin as decentralized money could be at risk. Bitcoin price predictions for 2025. But let's talk numbers, because at the end of the day, what investors really care about is where Bitcoin is headed next. Top analysts have wildly different predictions for 2025. Bullish case: if institutional demand keeps rising, Bitcoin could follow gold's path and reach 200,000 to 250,000 within the next 2 years. Neutral case: if Bitcoin ETFs bring stability but no explosive growth, we could see Bitcoin hovering between $80,000 to $120,000. Bearish case: if Wall Street starts playing games with Bitcoin's price, or if regulations hit hard, we could see Bitcoin struggle to break past $60,000 to $80,000. And then there's the most shocking prediction yet, something that could completely change how we think about Bitcoin's future. The hidden risk that could change everything. Some experts believe Bitcoin ETFs might not be the game changer everyone expects. Here's why. ETFs don't actually increase Bitcoin's scarcity. They just change how it's traded. Unlike buying Bitcoin and holding it in a cold wallet, ETFs don't remove supply from circulation, and that could lead to a massive problem. If institutions control too much of the supply, they could do what they've done with gold, silver, and other assets: use paper trading to suppress real price growth. And the craziest part? Some analysts think that by 2030, Bitcoin could actually become a government-controlled asset. Sounds insane, right? But history has shown that when an asset becomes too powerful, governments step in. Could Bitcoin ETFs be a Trojan horse for greater financial control? So, what should you do? If Bitcoin follows gold's trajectory, ETF approval could mark the beginning of a long-term bull run. But if Wall Street takes over, we could see Bitcoin become less of a revolutionary asset and more of just another investment product. So now the big question: is Bitcoin still the best way to build wealth, or is there a better opportunity emerging? That's what we'll explore in Part 3, where we dive into alternative crypto investments, the role of Ethereum ETFs, and what's next for blockchain in 2025. Don't miss it. So now we know Bitcoin ETFs have unlocked massive institutional investment. But the real question is, what's next? Will Bitcoin continue its climb toward $200,000 and beyond? Or are we walking straight into a Wall Street trap? Because here's the thing, Bitcoin isn't the only game in town anymore. There are other crypto investments gaining traction, some of which might even outperform Bitcoin in the coming years. And in this final section, we're breaking it all down. The rise of Ethereum ETFs and why they could change everything. Alternative crypto investments that could explode in 2025. What smart money is doing right now, and how you can position yourself for maximum gains. And at the end, we'll answer the ultimate question: is now the time to invest? Ethereum ETFs? The next big thing? Bitcoin might be getting all the attention, but behind the scenes, Ethereum is quietly setting up for a massive breakout. In 2024, we saw the first spot Bitcoin ETFs approved, but Ethereum ETFs could be next. And here's why that matters. Unlike Bitcoin, Ethereum has utility. It powers smart contracts, DeFi, and even NFTs. Big institutions are already buying ETH in anticipation of ETF approval. If ETH ETFs get the green light, it could trigger a Bitcoin-style price surge. Some analysts believe Ethereum could hit $10,000 or more by the next bull cycle, especially if institutions jump in the way they did with Bitcoin. And that's just the beginning. Other crypto investments to watch in 2025. While Bitcoin and Ethereum are leading the way, there are other blockchain projects that could deliver massive returns. Here are 3 alternative investments worth keeping an eye on. Solana, SOL, the fastest-growing smart contract platform, known for its low fees and high speed. If it continues its rapid adoption, we could see 3x or even 5x gains. Layer 2, scaling solutions. Networks like Polygon, Matic, and Arbitrum are making Ethereum transactions cheaper and faster. As Ethereum grows, these projects could explode in value. AI and blockchain fusion. The rise of AI-driven crypto projects like SingularityNet, AGIX, is gaining traction. With AI integration, these tokens could see massive institutional interest. The key takeaway? Bitcoin isn't the only opportunity. The next wave of crypto wealth might come from high-growth altcoins. The smart money strategy, what institutions are doing now. We've talked about price predictions, ETFs, and alternative investments. But what are the big players doing right now? Because let's be real, retail investors don't move the market. Institutions do. And if we follow the money, we can see exactly where the market is headed next. Hedge funds and pension funds are quietly accumulating Bitcoin. Many of them couldn't buy before ETFs existed. Now they can, and they're moving in fast. Ethereum accumulation is increasing. Some analysts believe that ETH ETFs could be approved within the next 12 months. Venture capital firms are heavily funding AI-powered crypto projects. This is a trend that could define the next bull run. So what does this mean for retail investors like us? If history repeats itself, Bitcoin ETFs could push prices up in the short term, but the biggest gains might come from altcoins and emerging projects. So, should you invest in Bitcoin ETFs? All right, let's answer the big question. Is now the right time to invest? Here's the truth. If you want a safe, regulated way to invest in Bitcoin, ETFs are a solid option. No private keys, no hacking risks, and easy access through regular brokerage accounts. If you believe in decentralization, holding real Bitcoin might be better. That way, you own the asset directly and aren't relying on Wall Street. If you're looking for high growth potential, altcoins could be the move. Historically, Bitcoin pumps first, but altcoins outperform later in the cycle. And here's the most important thing. Timing is everything. Historically, the biggest crypto gains happen before the hype peaks. Waiting until the mainstream is all in? That's how you miss out. Final thoughts. Where Bitcoin goes from here. Bitcoin ETFs are a game changer, but they're just the beginning. What happens next depends on institutional demand. Will big money keep flowing in? Ethereum ETF approvals. Could ETH be the next big investment wave? Market cycles. Are we entering a bull run? Or is there another shakeout coming? The key takeaway? Crypto isn't going anywhere. And while the market may be unpredictable, one thing is certain. The biggest gains always go to those who position themselves early. So now it's up to you. How will you play this cycle? Drop a comment below. Are you investing in Bitcoin ETFs, or do you prefer to hold actual Bitcoin? And if you found this breakdown valuable, hit that like button so more people can understand what's really happening in the crypto space. Thanks for watching, and I'll see you in the next video.